Welcome to my trading psychology intervention. I'm going to talk about lesson 169 to 172 from Ivan Biaggi. But before we do that, I'll just tell you what I did. I was studying the whole afternoon here. I really like that place. It's my favorite place in the town where I live because in summer times you can sit on the terrace and have a meal and then just study, and people don't mind if you use space. There's not a lot of business right now going on, and it's really nice studying here. So I enjoyed my afternoon. I've started a new trading book because the market wizard, I've read a lot of the market wizard, and it gets a bit not boring, but it gets a bit it's a bit of the same, because it's always the same approach. They give you a trader, they give you his track record, and a small discussion with the trader, and then you move on to the next trader and do the same thing all over. And that gets a little too routine. It's always the same thing. And I like to change from time to time. I'm not over with that book. I'll finish it, but I've started a new one from trading psychology book, with the title is Elite Performers or something like that. And for now, it's really interesting, and it does me some good to change and to read something else. I told you yesterday I know not of one good trader you should listen to. By that I mean listen, who talks to you. But I know a lot of, but I've read a lot of good trading books. So it is something really intellectual, trading, and I think it gets better to people when you write it, when you have time to type a text. I think then the result is better than if you just talk straight into a camera, just as I do it right now. I've also spent some time working on my book. I'm a writer too, a Stoic writer, and I have one book which is already published, another one which is being proofread right now, and I'm writing the third book. And I have written a couple of books, but I haven't went through the final proofread, because I proofread it first and then I give it to somebody to proofread my books, and I haven't done that for now. But I'll do it. When I find the time to do it, and my proofreading person has the time to read the books I give her. She can't handle too much proofreading because she doesn't do only that. So I have to wait. Anyways, maybe one day I'll also write a trading book, but that won't be in the next years. I'll take some time to do it. But maybe I'll do that one day. Anyways, for now we're going to talk about today's lessons from Ivan Biaggi, and we'll start with lesson 169. To improve as a trader is to be open to change. So you must admit that you can be wrong and that market conditions change all the time. For me, there are three kinds of position you face in the market. You are either in a bull market, you are either in a bear market, or you are in a correction, which is a bear market, but it goes sideways. And for every type of market, you have to apply a different strategy, and it's hard to know which strategy you have to use when, because of course you can't use the strategy you use in a bull market in a bear market, and you can't not use both of them in a sideways market. So which is a correction? A sideways market is a correction and it's part of a bear market, but that's technical. The thing is, how do you trade it? So change is something that is always confronting you, and you have to learn to live with it and be open to it, and be also open to realize when you're wrong, and then exit your position and do something else and take the opposite position, by for example. So you must be open to change. You cannot have a mindset where you are 100% certain and whatever happens you don't change your opinion. That's not being a trader. That's being something else, but not a trader. You must have some respect for the market and what it's telling you. Lesson 170. Because if you don't have respect for the market and you don't listen to what he's telling you, you will just suffer and keep losing money until you have no more left to lose. Lesson 170. Discipline in the market is the bridge between goals and accomplishments. So discipline is extremely important. You must be disciplined, a disciplined trader, and you must love what you're doing. So for me, I enjoyed spending my afternoon reading trading books, and that's something you have to do. I enjoyed also from time to time looking at my open position and seeing how they are doing. So it's something you must like doing, and it must captivate you. And as much as that you spend 5 hours in a row studying it with no problem, and if you could, you would go on for 5 more hours. And there must be that kind of fascination for the market. And discipline is extremely important, because if you can't be disciplined, you won't know if you're actually right or no or wrong. You won't know if your trading strategy works. So if you're not disciplined, you just screw everything up. So you must be disciplined. You must be able to stick with your position when you take it. Know when you have to take a position, take it and stick to it until you have to exit it. So that takes some discipline. Lesson 171. Trading success is an iceberg. People only see the top. What lies beneath is failure, mistakes, losses, persistence, and hard work. So yes, people think it's an easy job. I've read the following sentence: trading is an hard way to make easy money. So there's something like that. The sentence said. Maybe it was said a little differently, but it's a hard way to make easy money. Yes, when you make it, it's not that hard to make money, but it's a hard way to make it. It's hard. It's extremely hard, and most people won't realize it. And there are a lot of failures you have to confront. There are a lot of mistakes. There are a lot of losses, and it takes a lot of persistence and believe in yourself and your capability of making money, and all that without hard work won't work. So it's all that combined, and it's really an iceberg. You only see the top, and the top is for example success, because if you're not successful, you won't talk about it anyway, or at least you won't trade. And people only see the top, and they ignore all the hard work that lies beneath, all the pain they had to take to get to where they went to have some success. Lesson 172. Adversity causes some traders to break, others to become records, others to break records in terms of results. So there are two types of traders. There are the trader that faced with adversity, faced with price moving against him, who will simply break. They can't live with it. They simply can't. It is beyond their physical capacity to keep on living with price moving against them. They just can't. So they break and they stop forever trading. And there are other traders who use it as a motivation to break records. in terms of results. So at the end, they will break records in terms of results, and they will also break records in terms of persistence and hard work. So that's why people who want to choose trading because they think it's an easy job, they have no idea what they're putting, what they're what they're doing. It's probably the hardest job on earth, not because of what it takes physically to do it, but because of what it takes emotionally to do it. Okay, and that's it for today. I've enjoyed talking to you quickly, and I'll let you take a quick look at the nice view that we have here, and then I call it a day. Okay, thanks for watching, and if it's possible, I'll see you tomorrow, probably at the same time, and we have one more talk about trading psychology, which is, in my opinion, an important subject, maybe more important as the technical side or the fundamental side. Trading psychology is the thing as a trader that will allow you to move on or to break or to stop trading. So it's an important subject, and I find the advice from Ivan Biaggi quite interesting, and I've enjoyed talking about it. So let's keep the good work going, and if fortune allows it, I'll see you tomorrow. Thanks for watching. Don't forget to like and subscribe. Bye bye. Have a nice day.